So we've had quite a bit of drama and excitement yesterday. There was at one point the market baking in a 400,000 barrels per day monthly increase between August and December, because that's what Saudi Arabia and Russia seemed to have tentatively agreed, which, going by past norms within OPEC Plus, was thought to be as good as a done deal. But then, of course, we had the UAE throw a spanner in the works. We can talk a little more about what happened there, but I do expect OPEC Plus to remain conservative. I think Saudi Arabia is guiding that direction now since the start of this year. And 400,000 barrels per day will probably, every month, will probably fall short of the projected increase in global demand. So the idea there probably being OPEC Plus wanting to keep markets on the tighter side.
Okay, keeping markets on the tighter side. And what does that mean for the price range of oil?
So if we look at, of course, the projections from the echo chamber of bulls has been, $80 anytime soon. And, we've heard, of course, $100 prices, perhaps not for this year, for next year. Look, I'm not that much of a raging bull. I am constructive. I think, especially as I mentioned earlier, I think OPEC Plus is being far more restrained in how it releases the oil that it is still withholding back into the market. So, at least over the summer months, I think $70, $75 Brent range sounds reasonable to me. I would be cautious on, expecting a continued surge, especially towards the end of the third quarter and going into the fourth quarter. I think there's a lot of uncertainty still in the air with regard to the virus, the variants, and how these countries manage, because vaccination rates will still not be close to herd immunity in most of the world going into Q3 and Q4.
Vandana, why do you think the market, the oil market that is, has been so resilient in the face of these concerns around COVID so far, that is?
So, I think it's been a lot of forward-looking going on in the market. So a couple of things. First of all, I think the U.S. rebound and the U.S. leaving behind all COVID restrictions almost quite, dramatically starting in April and May has taken the markets by surprise. But that has also set expectations in a slightly different, more optimistic path, I would think. First of all, we see, complete reopening of the U.S. economy. The U.S. macroeconomic indicators, the mobility indicators are all going gangbusters. U.S. stocks have been declining for weeks at a very strong rate. So the market's sort of using that as a model that this is what is going to happen or unfold in the rest of the world. In the coming months. It may be a bit too optimistic, but that's what the market is factoring in.